Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis, where we break down popular companies using fundamental analysis and provide advice that is truly unbiased and has no strings attached to it. And again, if you like the videos here, you're looking for more future stock tips, more future companies to maybe invest in, don't be afraid to subscribe to our channel. As again, we do this on a weekly basis with different companies. But today's company, pretty prevalent in the news today. I mean, made some major headlines. We're going to be talking about Boston Beer Company. The ticker symbol for that one is SAM, like Sam. And I don't know if you want to tell the story of what happened or you want me to
Well,
start it off. I mean,
let,
crazy stuff would happen.
us both tell a story because one thing you said, truly unbiased. Well, the word truly was not good for Boston Bear today, was it?
No, I mean, it definitely was one of the catalysts that took the stock down. To give our viewers some insight, is Boston Beer Company was down 26% today. Not even this week. Today it was down 26%. I mean, that's a very uncommon decline for you to see
Yeah,
on stock.
and we got to point out that's 25% of the market cap of the value. One quarter of the company gone, just completely gone. And let's talk about the numbers a little bit. We'll talk about what went on. They did report diluted earnings per share of $4.75. Now, this was a decrease of 13 cents from the second quarter of 2020. So things are supposed to be better now, and they're not. They actually went down. Also, they saw increases in their operating expenses, lower gross margins, and also too a higher tax rate. But the big thing was you younger people, either you're confused about what to drink on the hard seltzers, or you slow down on drinking them. Which is it, Chase?
Yeah, it's a great question. I actually have been drinking less seltzers lately, so maybe they're not as popular. But part of the problem is, as you said, that there's so many seltzers out there right now. And before I kind of get into that discussion, you talked about the decline in earnings.
Mm-hmm.
Talk about a big miss in expectations. Analysts were looking for, let's see, $6, I believe it was $6.69 per share is what analysts thought they were going to make this quarter. To revisit that number, $4.75. I mean, that is a huge, catastrophic miss. That's why the stock declined. And we'll get more into the valuations. That is part of the reason why it was even, I think, compounded further. But kind of back to this truly discussion, the hard seltzer discussion, there is now management points out that there's 220 brands of seltzers out there. I
And
think
Chase, we're going to jump around again because I want to go back to the earnings because, again, I can't remember the last time I've seen an earnings miss of, I think it was about 30% plus.
yeah.
Again, 475 versus the six. That is a huge miss. Usually no one misses by that much because they are kind of giving guidance throughout the quarter and people are checking things. To miss by that much, that is a major uh, surprise
Yeah.
because of the fact that you just don't miss by 20-30% margin. There's something wrong that the company or the analysts were sleeping on the job, and maybe they were drinking too much seltzer. They weren't seeing what was going on. But let's get back to the actual seltzer. The problem was, you're right, there's what you said, 220 different varieties of seltzers that you get overwhelmed. And when I go in the grocery store, I mean, I think we both like the same seltzer. It's a Vizzy.
Yeah.
We love that one, but it's hard to find because there's almost as many seltzers, maybe more than there is beers out there now.
Yeah, I mean, you walk down the beer aisle. Before, it used to all just be beer, and you get your domestic, and you get your Coronas and things like that, your different brands. But now it's like seltzer have paved out this pretty sizable chunk in there. And you're right, you're like, wow, I didn't even know. I saw Michelob Ultra, or not Michelob Ultra, but Michelob now has a seltzer as well, and Corona has a seltzer, and Bud Light has a seltzer. We talked about Vizzy. Topo Chico has a seltzer. There's this thing called High Noon. I mean, the list goes on and on and on. And the problem is, truly, I believe they were one of the first big ones. I know they were one of the first big ones. I'm debating if it was them or White Claw that were first to market. But when they first came out, it was them and White Claw that really controlled the market share. And it was such a big growing industry that, wow, this is going to be great. And they're going to do this forever. And the growth rates are so phenomenal on it. But this is one thing that investors often discount. This is why we don't like growth investing, where we invest in high PE companies, because you cannot predict future market entrants. And again, that's what is just crushing this Truly brand.
And again, competition is so important. And what made Truly so special? Well, nothing really. I mean, somebody else can create the same type of hard seltzer, and you've got to be able to have the marketing and everything else. So this is why you got to be very careful, or you shouldn't actually pay up so much for these growth type companies with a Truly. Like, oh, everybody's drinking, everything's great. And you get so emotional about it that you forget about other companies coming in to taking a little bit of market share each time. If you have, we'll just say 10, 15 different companies coming on new products and they all take 1% of the market share from there, that's a 15% decline in market share. That's going to hurt your profit margins and your profits.
Yeah, and I do think that they were just riding that hype train in terms of kind of living on cloud nine, so to speak, looking forward on these truly sales and not really accounting for all these new entrants. And I do think it's going to be interesting because they were kind of the first players, as I said, to have a public company because White Claw, the other major player, I believe they are privately held. I think that a lot of these other companies, I talk about Corona, you talk about the Vizzies, the Topo Chicos, those are both owned by Molson Coors. I don't think that they're going to have the same negative impact because they didn't have the same exorbitant growth rates baked into it like you had with Sam or Boston Beer Company from Truly, that now they're having these major problems. So I think it is going to be interesting to see what these other major beer companies, beverage companies come out with over the next few weeks in terms of earnings.
And also to Chase, for Molson Coors and Budweiser, uh, the hard seltzers were such a small part of their business as opposed to Boston Beer. I believe Truly became one of the biggest parts of their business, and that's also why they got hit so hard by this. And this is why it's so important when you're investing in a business to really understand that business. Don't just buy it because, oh, this is going to be great, this is going to go up and so forth. You've got to understand the business because things can happen, and then one day, what happened? I lost 25% of my stock today. It's because you weren't watching the business.
Yeah, and one thing that we do like to do here at Will Asset Management is look for undervalued companies. And this is going to be kind of an interesting, I'm going to say, history lesson for people. And it's not too long ago in terms of history because the numbers are from yesterday for Boston Beer Company. But you can see how expensive this company was before they reported earnings. So let's get into the numbers for Boston Beer Company. And again, they just blew me away when you're looking at what you were paying for this business.
Yeah, and also true, Chase. I mean, because next week we'll do another company and so forth. Maybe what we can do is a special edition to where we just do a follow up on some highlights from Boston Bear next week to see what the fundamentals look like next week compared to this week. But for now, let's look at the numbers we have here. We do see the PE ratio, price earnings ratio. What you're paying this company? Wow, 51. But that's not really that bad compared to the industry at 85. The whole industry is very expensive, along with the price of sales 6 times versus 3.2 for the industry. So the industry is better than the company on the sales, what you're paying for it. Price to book value is 14.3, nothing for the industry, not material. It means you take away all the intangible assets, and actually in this case, everything, the liabilities do exceed on the industry side the assets. Not a good position to be into. Company's better than that, but price of cash flow for Boston Beer 39 times versus 14. Take it 39 years based on current price of cash flow, which you'd get back in cash flow for this company. Not a good valuation. Now, the reason why this has done so well, and by the way, they do not pay a dividend, is you look at their sales growth. They have done very good. I mean, the revenue year over year for the last 12 months up 46.8%. That is phenomenal. And that's why everybody's getting excited about this, how the sales are growing. Compared to the industry at 0.8, they weren't even growing their sales at 1%. However, you look at the earnings per share for Boston Beer, you do see that year over year that they were up 141%, which is very, very good for any company to grow their earnings at 141%. But people think that's going to keep on going. It's not going to happen, it appears. But also, too, when you compare the industry had a growth rate of 500% on their earnings. Now, keep in mind, this is year over year. So we're kind of looking at the second quarter of 2020 during the great pandemic that we went through, and that can change numbers. So you got to understand the numbers as well.
And very
But
important before we move on is it'll be interesting to see when they report numbers because this currently is from the first quarter of 2020 and 2021. And now when we get the new numbers, now we're going to be looking at the second quarter. So that's why I was so surprised they missed so prominently this year.
Oh, you're right. I'm glad you pointed that out because these are numbers that were based on the first quarter because they just released earnings. So we don't have them. Reuters, Thomson Reuters, Infinitiv does not have those for us yet. So that's why I was saying, well, let's take a peek next week to compare. So if you're an investor, and I guess I can revisit this video anyways on YouTube, kind of compare the two. I think you'll see some big differences. So Chase, thanks for pointing that out. That's important that these are last week's numbers based on the first quarter. What probably won't change, I don't believe, is the financial strength, the balance sheet of this company, which is very good. They got a very good liquidity current ratio, 1.66 versus 1 for the industry, a lot of liquidity there. And what's great too is they've done all this growth and have not touched the balance sheet with debt. No debt in the balance sheet versus 66 for the industry. So that's positive. That tells you this business can weather the storm and not worry about creditors knocking on their door to start collecting their bills they fall behind on. They can't make their debt payments. Return on equity also is very good, 25.6 versus 2.8 times for the industry. I love the net profit margin they're making, 11.8 versus 3.8. And this is another thing too, Chase, that could happen to this company. We could see it next week that perhaps this profit margin will come down because competition comes in. You got to lower your prices, can hurt your profit margin. So understand what the business is. Very important to look at these numbers next week. Also, to receivable turnover, very good, 23.9 versus 11.7. And inventory turnover, 7.2 versus 4.5. Very important because you want your business, especially a beer company, alcohol company, to be able to turn that inventory over. You don't want to sit in a warehouse because you don't earn any money when it's sitting in the warehouse.
And it's so interesting when I look at these numbers on Boston Beer Company. A lot of times people say, "Oh, well, but it's such a great company," and I'm honestly blown away with how clean the balance sheet is. As you said, they've
Mhm.
been growing at a very nice rate. It's a great business. I think they've done a phenomenal job, but it was just too expensive. Again,
Yeah.
not undervalued, definitely overvalued, and it really comes into play even when we look forward. And the reason I'm going to say that is, again, this is yesterday's price, the close of yesterday. $947.54. Now, based off of that price, the forward PE multiple is about 32 times earnings. Now, the long term average, what we use is 16.6. It's about 2 times as expensive as the long term average. By no means are you getting a good value on this company. It was very, very expensive. And there's a big difference between a good company that you get a great price for and a good company that's just overpriced. And that's exactly what this business was.
Jace, I gotta steal this from you because I cannot believe that the 52-week high is 1,349. That means the stock's been cut in half. What's going on here? Gee, that's incredible.
Oh yeah, I mean the stock's been cut in half. You said, I said 50 we cut 13.49. Current price is again a reminder for our listeners, $701, or I guess our viewers here. So again, about 48%, so darn near that 50% decline mark. And again, trading back around the 52-week low of $653.06. There could be even more pain for this company moving forward as well, just based off the terrible news that we saw today. Now, I do want to point out as well, we generally go out to December 2022 to look at the average estimate for earnings per share. In this case, we can see is $29.76. What that would give us is a target sell price of $494.02. And I said it could fall further. Target sell price $494, current price is still $701. So we're still overpriced in my opinion. And I think those earnings estimates are going to come down substantially after the terrible news release that they had. I'd be cautious of this. I wouldn't view that 25, 26% decline as a buying opportunity when it comes to Boston Beer Company.
And Chase, let me just say again that you're talking the target sell price, not the target buy price. It's still above our target sell price. And again, we're very conservative. I do see when you look out the earnings going forward to 2023, 2024, they are higher. And many times your growth investors really get excited about things. They just tack on these high numbers. But I think those, as you said, are going to change. This is why you got to be very careful of the business when you overpay for it, because those earnings are going to change. And I was kind of hoping, we've not looked at this ourselves here. This is the first time we're actually seeing this. You're kind of seeing it live. I was kind of hoping that maybe this could be a buying potential, but based on these numbers, I mean, gosh, it's just not there. And I think we should check this next week for people because I know there's people probably going to step in and buy this. They could be catching what they call it a falling knife, I think is a trading term.
Yeah.
I just don't see enough fundamental reason for this company to go back up to anywhere near uh, 700 or so.
Well, and the problem is you talk about it not being a value company. Well, if all of a sudden that growth dissipates, now it's no longer a growth company either. So
Yeah.
nobody wants it. Value investors don't want it because it still trades at 30 times future earnings, depending on how far those earnings do fall. And now growth investors say, well, now it's not even growing that much. I don't want this thing. So now
Right.
you're really not left with much opportunity in terms of buyers for that stock. So again, be very cognizant of that. And I will point out, just because Sam Adams, Boston Beer Company, is not a great buy. It's interesting. I think there are some good opportunities in the beverage space that are undervalued. But this one, even with the decline, it's just not looking good.
And Chase, you bring up another good point there, because one thing this has done is it may have pulled down other good beverage companies that now could be undervalued, because in a sympathy fall, like, oh, that happened to them, what's going to happen to these other beverage companies? It does give you the opportunity to say, well, wait, let me check on some of these other beverage companies, because maybe they are trading at 10, 12 times earnings, didn't have that high peak, but didn't have that large decline on their earnings. So maybe they could be a buy there for investors.
Yeah, no, it's definitely a great point. But again, I'll reiterate, Boston Beer Company is truly not a buy here.
Well said.
Yeah. Anyways, thank you for joining us today. If you like the content, please be sure to subscribe to our YouTube channel for upcoming stock videos. This should not be used as investment advice, as it is for informational purposes. If you're interested in learning more about our investment philosophy, again, we are a registered investment advisory firm. San Diego, manage close to about $450 million using this unique approach to value investing. Please visit our website, smartinvesting2000.com. Again, that is smartinvesting2000.com.